Hey guys, welcome to another episode of Suits and Boots Legal Talk. Today, it's all about title insurance. Stick around. Hey guys, so welcome to another episode, Suits and Boots Legal Talk. I'm here with Kristi Moretz-Icard. Thanks for joining us, Kristi.
Absolutely happy to be here.
So tell us what you do.
So I am a title attorney at Investors Title Insurance Company, and I basically provide underwriting and legal support to our approved attorneys like yourself and our branches and agencies throughout the state.
That's pretty cool. So one of the things I was thinking about this morning as I was thinking about the podcast is your job is a job that has to be so demanding in some ways because whenever I get stuck, you're one of the people I call. So when attorneys have questions, this is the attorney behind the attorney. So it's like, I mean, you have to get some real doozies.
Yes, and I would say we take questions via telephone and email, and some days it's like bing, bing, bing constantly coming in. Other days you get a little breathing room. The telephone ones are always the most exciting because you never know what's going to be asked and what you're going to say.
Yeah.
And we also have a group of 7 of us, so we can bounce ideas off of each other as well. Sometimes
great.
It's a complicated matter and you don't want to give an answer immediately, and you're like, hey, I'm going to poll the group on this one, especially if it's something of first impression, which we're seeing more and more of these days, I feel like. So it's we've got 7 title attorneys. We're all in different areas of the state. We all have different experiences, so it's a nice group to be able to work with to give you guys answers that help you get it closed and also keep you protected. So
yeah, you said if it's something complicated, but I can't imagine that there's a whole lot of questions that you get there. It's like, oh, that's just a softball. That's so easy.
There's a few of them from our newer attorneys, right?
Yeah.
They're nervous and they want to make sure. So it's just sort of like a reaffirmation that, yes, I'm doing this right. I've got the answer right. So those are a nice break in between the doozies that we get. But even those sometimes are complicated depending on the fact scenarios. So it's nice to get those, but they are few and far between.
Well, and this is a confession for you folks out there, I guess. But one of the things that I'll do as a title attorney is if I have bad news to give to a seller especially, then a lot of times, even though I may know the answer, I'll shoot an email to the title company and say, hey, here's the scenario. Here's what I think we need to do. Am I correct? And the title company will respond back and say, yes, this is what you need to do. Or they might, I've had them respond back and say, well, you could do that, or you could do this. And then I can send that to the sellers and say, look, it's not me, it's the title company.
Right.
And so it makes me,
we're happy to play your bad guy when we need to. But we also try to come up with creative solutions to help work around, because title insurance is not necessarily what's legally correct. It's risk assessment, right?
Yeah,
so sometimes even if it's not legally accurate or something went wrong along the way, if we've got time on our side, low risk on our side, we might say, we'll just insure over that. So it's always good to reach out to us and ask, because some of that liability you don't want to take on personally.
None of that liability I want to take on.
But you're happy for us to do it. And then sometimes you'll say, well, yes, you're willing to insure it, but I still don't like this. I want this corrected, and we're going to move forward with a correction. And I get that a lot too. I did that in my private practice, that just because the title insurance company wants to insure it doesn't necessarily mean that's what's the best interest of your client. So you've got the option to talk to us, get our opinion, and then decide how you want to proceed.
Yeah. So when we talk about title insurance, if you guys have done a closing with me, you've seen it on your settlement statement or on your closing disclosure, title insurance, and it's maybe even broken down into lender's insurance and owner's insurance. Mm-hmm. Talk generally, what is title insurance?
So title insurance essentially is a contract of indemnification for covered risks. And the difference between title's insurance and, say, homeowner's insurance is title insurance protects from defects arising as of the date of the policy back in time, not for future defects, right? So for a misjudgment or a misdeed of trust or an estate issue that happened 10 years ago. So title insurance is for defects back in the chain. Sometimes there are things that just maybe got missed. Sometimes it's indexing errors. Sometimes it's something that just popped up and nobody paid attention to. But it's a contract of indemnity, and it basically protects against actual loss or damage. So there can't be, oh, there's this outstanding deed of trust. What are we going to do? If nobody's trying to enforce it or foreclose on it, we're probably just going to say, we're going to continue coverage and insure over.
Yeah.
Now, if the lender has filed a foreclosure action, then actual loss and damage starts arising, and we're going to take action and maybe negotiate a settlement to try to get it paid off and canceled of record. But the main thing is it protects you for things in the past, covered title defects in the past, and there has to be actual loss or damage to you.
So for someone who's bought a house and they got title insurance at that closing, if for some reason somebody comes and says, hey, this is actually my house, title insurance covers that. What are some specific examples you've seen?
Right. So I'll give some basic ones where there's usually coverage. Say there is a judgment indexed, and for some reason it gets missed or doesn't get picked up, and we're still within the 10-year enforcement period. If that creditor goes to levy against the property, then title insurance will come in and say, okay, we've covered this. We're going to negotiate with this creditor. We're going to see if we can get it released for less than what's owed, most likely. Yeah. We may basically have them assign the judgment to us, so we'll get it canceled for there. We'll get them to release it to us, and then we'll become the creditor, and we'll insure our insured, and then potentially it will still affect that seller, so to speak, in the future, because we'll have that judgment in our favor on the clerk's office. But we have the option to negotiate a release, defend a claim, take it to litigation. So that's part of what title insurance covers is court costs and attorney fees for us to defend a claim. Deeds of trust are another one that are interesting, because if there's an old deed of trust that hasn't expired per statute, but you go to sell and the next attorney finds it, we're usually probably going to say, we're going to just continue coverage over that. We'll give you Alta 34, which is identified risk that says, hey, this is out there, but we're going to give you coverage if something would come up from it. So for there actually to be coverage, that lender would have to institute foreclosure actions, right? If they're not doing anything, we're just going to wait and see when it expires. And then once it's expired, we're done and everybody's good to go. The survey coverage is a big one, right? Because some of the things that people think are covered by title insurance are not if you don't get a current survey.
Right.
So access is one. If we've insured legal access to your property and you don't have access, that could be a coverage that we would give you. If you've got a neighbor encroaching on your property, but you didn't get a survey and we didn't know about that at the time and we took a survey exception, there wouldn't be coverage for something like that.
Right. So that's one of the things that I thought about as I was thinking about title insurance is the survey, because so often we see these, especially these little roll-off buildings that people will get in their backyard. Those things so often are on the property line or just over the property line. And, it's not that big a deal to move it, but then neighbors kind of there's friction, and then they want to file a claim on their title insurance. But without a survey, there's no way to know, hey, that building was there prior to closing, right?
Right. And typically, and we'll talk a little bit about owners versus lenders coverage on this, because this is a good delineation of what is what. For lenders, we're automatically going to give a lender survey coverage if the loan amount's under $5 million and it's an institutional lender. Okay. So they automatically get survey coverage on there. A
small percentage of our closings are under $5 million.
Right. But the idea being that a lender's policy, there's much less risk because coverage doesn't come into play until they actually go to foreclose and need to be recouped for their insured deed of trust, right?
As long as they keep getting paid on that.
Right. As long as payments are made, they're not going to do anything. They're not going to file a claim. The owner's policy, there's much more risk with that because an owner is going to be much more likely to file a claim on something. So say you don't get a survey and you've got an encroachment. If you're an owner, that's a problem. There's not going to be any coverage. But if you do get a survey beforehand, usually it's not necessarily that we're covering over those encroachments. It's they're being identified and addressed before closing. So you could do an encroachment agreement, or you could just go ahead and have the parties move the encroachment depending on what it is. Sure. So even with a survey, it's not necessarily that we're covering over these defects. Like, say your pool is 20 feet on the neighbor's property, right? The best way to fix that is probably going to be seeing if the neighbor would deed you that 20-foot strip, right? Like, that to me is a better way to fix that. You could do an encroachment agreement for fences, some driveways, stuff like that. But for title insurance purposes, it's not that we are giving survey coverage in the sense that we're saying, okay, any defects that show up, we're going to insure over. It's that, okay, these are the ones that have popped up. This is what you need to do to correct it so it won't be an exception on your policy. And these might be minor, so we're going to just tell the lender, we're going to insure over for you, but owner, so sorry, you have to get an encroachment agreement before we're going to give you any coverage for that. Yeah. So there is a difference. We do have, and you guys will see it on your settlement statement or your closing disclosure, there'll be a line item for lender's insurance and one for the owner's insurance. Correct. Talk about the difference in those just a little bit, what the lender's insurance is for and what the owner's insurance is for. So if your loan amount and your purchase price are similar in value, right, the loan policy amount is going to reflect what your loan amount is. So your coverage amount for that is going to go up to the loan amount. And then the additional coverage would be reflected in the owner's policy. So say your loan is $200,000, your owner's policy, your purchase price is $250,000. The lender is going to automatically require you to get coverage in the amount of $200,000. The loan amount,
an option.
not an option.
If there's a lender involved, we're going to have to have title insurance.
So they're going to have title insurance, and they're going to want a closing protection letter to make sure that you, as the attorney, the settlement agent, are doing what you're supposed to do and dispersing the funds accordingly. And we provide that to the lender as well. So for the owner's policy, that additional $50,000 above the loan amount, that premium, there's an increase for that, right? So they're going to add that amount. There's a simultaneous issue fee too. So it's not like you're paying $250 in coverage for an owner and $200 for a lender. We're doing it in a way that you get a simultaneous commitment fee, which I think is $25. It may have went up to $50. I could be wrong on that, but I'm going to say $25.
Sure.
And then your coverage for the lender, you're paying for that already because you have to, so you might as well just bump your coverage up to your owner's policy amount of $250 and pay that additional premium amount, which is not very much for $50,000.
Yeah, it's usually really low, actually.
So anytime you're getting a loan, my opinion is that you should absolutely get your owner's policy because you're already paying for the loan policy for the lender. So you might as well just go ahead and get that owner's coverage because the loan policy is not applicable for an owner, right? So if you get a loan policy, the owner cannot file any claims on that. It's lender specific.
Well, when we do closings, even if there's not a loan, we might ask, and we probably do ask every time, hey, do you want title insurance? But we always encourage it and almost insist on title insurance. But I've had some folks say, well, you're going to do a good job on the title search, so why do I need title insurance? So talk about that just a little bit.
And I will say, your attorney can be absolutely perfect in their title work,
Not
as Luke is, I'm sure. But there may be things in there that is out of his control. Maybe something got indexed incorrectly in the Register of Deeds, like a deed of trust, or a judgment got indexed incorrectly in the clerk's office. So title insurance is going to protect against those errors in the public record, which I think is very important because it happens more than you would think.
That we might not be able to find.
Correct. Even if you searched a name 4 or 5 different ways, it could have been misspelled so badly that you're not going to come up with it and find it. And other times, sometimes things just don't get entered in the system for whatever reason. And so I think for title insurance purposes, it just gives you and your client extra protection for things that may not have come up in the title search. Another one is like unknown heirs. We get that sometimes, right? There's an estate file. It's all been done. The final account's filed. You've got your application that has all your heirs on there. You got all those people to sign. And then somebody comes up and says, well, I'm also an heir and I didn't sign. Where's my 10% interest in this, right?
Yeah.
You did your work. You looked at the estate file. You looked at the obit. Everything matched up. But there's no way you would have known of an unknown heir. So if they pop up and you could potentially file a claim on your title policy and say, okay, you've insured my title free and clear of all these interests, and now we've got this unknown heir situation. So that's another one that I think is important. So it's not necessarily about protecting against mistakes that an attorney makes, because we're all human, let's face it, but you're going to do a good job on your title search. There just may be things you don't find. And so that's where title insurance can come into play and really help. And I have that happen a lot, particularly with judgments. Things just get indexed incorrectly, especially entity names sometimes. Or they do it and you may think it's expired because of the way it looks on VCAP or now Odyssey, and technically it's not. So stuff like that happens, and I think title insurance is just an extra layer of protection for you. And when you go to resale or refi, it helps you. You get a break on the title insurance premium. There's a reissue rate on that. And I think it just makes the closing process a little bit smoother because if you already have a policy and something comes up and you're going to sell, you have recourse with that policy instead of just relying on yourself and your attorney to get it fixed.
Yeah, and well, that and the attorney's malpractice coverage has a much shorter statute of limitations than title insurance. So title insurance is going to cover you as long as you're on title. My malpractice insurance goes away after 6 years or something like that. So.
And if you give a general warranty deed, technically those warranties, there's going to be coverage for that.
Absolutely.
So even if you don't still own the policy and you're 2 owners back, but there's a policy for 2 owners back and they give general warranties, there still could be coverage there even if it's not your seller that has that policy.
One of the big conversations that we've had, and it's sort of related to title insurance. Well, it's a lot related to title insurance. One of the things you just mentioned is Odyssey. So you guys, we haven't talked much about this. This is really kind of behind the scenes stuff. But whenever we do a title search, we check the clerk's office for judgments and things that might affect title to your real property. The clerk's office is on a system now or it used to be all counties was on a system called VCAP, which was an old DOS system. I should have brought my laptop in so I could pull it up and show you. It when I first saw this, I was like, you got to be kidding.
Right.
I started practicing in 2015, and I'm like, this is a DOS system in 2015?
It looks archaic. It looks like what you would see on one of those old monitors, bulky monitors coming up.
Yeah, like some 80s movie or something like that, like the Pelican Brief, or I don't know, whatever. But anyway, so You have to click through this thing. You can't use your mouse at all. I mean, it really gives you good keyboard practice.
You're using your F3s and your F8s and all that stuff.
Exactly. So a few years ago, the Raleigh decided, hey, let's maybe update this system
a little bit.
And I've had attorneys from other states come in and talk about how nice e-courts are, where you can just file everything online and everything's right there where you can see it. And it is, but North Carolina's in this transition period, right? So Odyssey is the new program, and there's all kinds of challenges with that.
It's just such a different program.
And that's something that title insurance is going to help, and you guys have helped with already in giving us heads up, like, hey, this is coming, here's what we're seeing. What are some things you're seeing with that?
So I would say the main thing is that the system search is just so different, right? Like in VCAP, you did a general, very broad, last name, comma, first initial to get as many results as you could and then narrow it down. Odyssey is a little bit more specific, right? When you do those broader searches, sometimes things don't come up that you're expecting to see. But with Odyssey, there are little ways where you can narrow your search, you can find what you need, and you can pull up copies or images of what you're looking for. So the idea is you can access more online with this, but it's a cloud-based, right? So sometimes it can be slow if a bunch of people are on it at the same time because there's public access for that. Yeah. But I think the main thing for Odyssey is just the way you're searching is going to be different than what you did on VCAP. You're going to try to start out as broad as you can and then narrow, but business entities, you're going to search those a little bit differently. You can click your county boxes to search by, which you did in VCAP, but in here you're checking boxes instead of putting, ALEX, the abbreviations for each county. Yeah. So Odyssey is just one of those things that we're still rolling it out. I think Iredale, it doesn't hit until like October 2025, right. So we've got time for that. There's still a few kinks that are being worked out, people figuring out the system with any new system. VCAP, we used it for so long, we knew all the tips and tricks to get as much information out of it we could. Odyssey, we're still learning new things. And so part of what we've done, because of that transition of data from VCAP to Odyssey and the new Odyssey system and just figuring out how to best use it to get the information, we are doing the North Carolina Land Title Association indemnity agreement so that your sellers or buyers at closing are signing that just saying, hey, we're aware that there's a new system in place. Some of the migration of the data may not all be in there, or the indexing is different, and so we might not find all the things that we need to be finding. And so we as a title company and other title companies as well are taking that so that we can issue a policy of title insurance without exception for those issues. And we did have one recently where somebody missed an HOA claim of lien because of a period, right? Like just the way it was indexed, it had a period in there and it didn't come up. And so there's coverage for that because they got the indemnity signed, submitted it to us, we insured without exception, and then they came back and said, oh no, we've missed this HOA claim of lien, what are we going to do now? So they were able to file a claim on their policy. But it's really just searching a different way, being more cognizant of what periods, commas, spaces and names and stuff. So
the little minute details, isn't it? Yeah.
And so I think that's the biggest thing is that any change can be traumatic, right? Especially when you're used to doing it one way for so long. And this is just such a completely different system that a lot of attorneys are very nervous about it. And they're going in and like really doing these deep dives in there to make sure that they're not missing anything. And they may still miss something, which is where the indemnity comes in and where title insurance comes in.
Title insurance comes in. And that's why you guys are so important, because there's no way that we can see everything. There's just too much data, too many possible things that could go wrong. So title insurance really helps us to cover that and to make sure that we are protected from those unknown things that might come up. That's where you guys are really, really helpful. One of the things that I've heard people talk about, and one of the things that I've experienced is that, as we move into more, I guess, technologically advanced things like this, we just get away. I mean, there's still counties where you have to go and pull the old books off the shelf. And one of the great things about that is, you're flipping to a page and that book might be as big as half of this table. And you just go down through there and you can see every way that name might have been spelled. So you're going to catch up with that. But in a system where you're entering that name, it all depends on how you enter it and how the person before you maybe entered it, and it can just be like... And
same with the Register of Deeds too, right? Their online system have those disclaimers on there. So I think just as more and more we rely on technology, it's fantastic in terms of efficiency, but sometimes, there's going to be typographical errors or technical errors that would not be if you would have just went to the Register of Deeds or the clerk's office and searched it. That's not practical anymore in today's practice, I don't think, especially when attorneys attorneys are closing in different counties and stuff, you're going to have to rely on that technology. But it is interesting that, even the Register of Deeds has the disclaimer on there that, hey, these are electrical records right now. If you want to make sure you're accurate, come into the office and check the books.
Check the book. So as real estate has been crazy over the last few years. I mean, it's been a market like I've never seen. And when I talk to people who were in the market pre-07, 08, they seem to say it's a market like they've never seen. So, right. I mean, it's just been really, really crazy. Over the last 2 years, it's really slowed from what it was 2020, 21,
Yep, that
23.
COVID boom, there was all that activity, and then now we're seeing a slower market just in general with higher interest rates, higher purchase prices, properties not selling and reselling. I think there's a lot more building going on to meet that need of housing because the people that have their houses at their 3.25% interest rate aren't selling right now.
Yeah, and why would they if they're going to trade 3.25% or 2.75 for
less property at a higher price and a higher interest rate?
Exactly. So you guys are seeing that slow. It's pretty much statewide. It's not.
Yeah, I see across the state. So I get questions from across the state. And it's interesting because, the questions you get for properties on the coast are going to be different than the question you get for mountain properties. But in general, the market is slower across the board, right? There may be pockets of cities here and there that have a boom, but for the most part, I'm seeing things are still coming in waves, right? One month you might have a really good month and be busy. The next month it's slower. And that's sort of across the board in general. I think we are still in that slower phase. We are definitely not at that COVID craziness as it was where things were closing left and right. And pre-COVID, it was a good, we had good numbers, good flow coming in. I would like to get back to that, right? I think if interest rates move a little bit, we might see that. But in general, I think we are still down right now.
Do you have any prediction on interest rates?
I don't. I don't With either. It being an election year, I just don't know what's going to happen. I think it's up for grabs.
That's everybody. Even the loan officers I talk to are kind of like, at the first of the year, we heard, that it's going to be a record year for interest rate cuts. They're going to cut it just hasn't happened.
Mm-hmm.
So,
and I have seen that prices have dropped a little bit. It looks like the purchase price has come down a little bit in some areas, maybe not in all areas, but that seems to be the case. But I have no prediction on interest rates now.
It's not like a friend of ours bought a house during COVID, and he showed up to look at it, and I think he was number 14 that day, and the house had just been listed. So it's not that's just not happening right now. It doesn't seem like. So. And
I will say, as a title insurance company, we try to keep abreast of what's going on so that we can deliver that information to you guys. Stuff like Odyssey changes in the market, seller fraud, wire fraud, things that are happening now that weren't happening in 2008 because the technology changes. And so that's one thing that we do as well for our approved attorneys in our markets is try to make sure that you guys are aware of what we're seeing. And if something's happening in Charlotte, we can let you know, okay, this is what's going on. Be prepared because it may be hitting you next. So that's a nice thing is that we see what's happening across the state and can convey that to our approved attorneys and give you some advice in terms of how we're going to underwrite it, things that we're seeing, ways to maybe prevent some of the issues. So we try to keep up to date on what's going on in the market itself so that we can relay that information to you guys.
I saw a headline the other day. I believe Mooresville is like the fastest growing suburb in the country or something like that. And then I was looking at some market analysis the other day that said 130 to 150 people per day move to the Charlotte area. So, I mean, that's a big area when you think about Charlotte, because I'm sure that encompasses Mooresville.
Yep.
But 130 to 150 people per day. So we live in an area that's experiencing tremendous growth.
Yes.
So I don't think that we're going to see something like a 2007, 2008 collapse again.
Yeah, and I don't think that either. I think while it's slow, I don't think we're going to get there. Fingers crossed we don't get there.
I think we're just cooling. It's hard to imagine a way that the housing market would crash when you got this amount of people moving to the area every day. I mean, that there's demand.
There is. And, anytime you drive down the interstate or the road, you see construction everywhere. So things are going on, commercial and residential wise right now.
So if you're thinking about buying a house, interest rates are high, but one of the things we've talked about is, you marry the house, you date the rate. The rate is just going to be what it's going to be. It's going to change.
Yep.
But that house, if you love it and if it's available, go ahead and get it bought.
Right. Because there's only so much land. There's only so many houses, right?
Exactly.
I feel like that's becoming, a lot of the developers and builders are pushing out into more rural communities because there's no land left in the bigger cities.
Well, right now, so that brings up something we're seeing here in Iredell. So in Iredell County, we've got got the South Yadkin River kind of cuts across the county, and it's north of Statesville, a good ways, probably 2 or 3 miles. And so the county commission right now is debating a rule change that would say properties north of that river can only be subdivided to a certain point. So they can, like, they're doing minimum lot sizes and things like that. Okay. They haven't
for density and infrastructure issues, right?
Yeah,
we want to make sure that we can support this development.
So are you seeing that in other counties, or is that?
I am seeing that. There are some proposals that have been done for rezoning that are getting shot down because they're like, that's too many. We don't have the infrastructure. We don't have the highways. We don't have the water. We don't have the things to do that, especially when it pushes out into more rural communities, right?
Yeah.
They're not ready for it.
And then you've got the farmland preservation piece and the agriculture. So there's a lot. And so we're going to do a podcast on this in the future because it's something that's super interesting to me. And it's just, it's really neat. And it's something that I think a lot of our, especially the rural counties like Alexander, where we're from, and especially Iredell, where you've got this southern part of the county that's kind of one demographic, and then the northern part that's completely different.
Right.
I think it's something that we're going to be seeing across the state, especially in this Charlotte area.
I do. I think there will be definitely developmental changes. I've seen a lot of people trying to get properties rezoned just to prepare, either to preserve them or to sell them for development. So it'll be interesting to see what happens as building and development continues to push out of the bigger cities into the more rural areas.
I've thought about, like, over here off of Chipley Ford Road, there's an area, Fort Dobbs and Chipley Ford, that when I was a kid, that was all wheat fields, and now it's all houses.
Yeah.
And then Midway Road there's a big farm there that used to be all wheat fields, and now it's all houses.
Right.
And, you know, as I think about that in the 40 years I've been alive, how much change we've seen, I just think, well, gosh, what's it going to look like in 10, 20 years from now?
I know. And real estate's just changed so much. I started practicing in 2008, and from 2008 to now, you know, your settlement statement has changed.
Yeah.
The way you handle funds has changed, you know, certified check to wire to now back to certified check with wire fraud. So it's just very interesting how it flows, ebbs and flows, and how things change. We try to stay on top of what's going on, but technology is really playing a huge part in this real estate development now.
It's crazy. It is crazy. Well, guys, thank you so much for coming, Kristi.
Absolutely.
I really appreciate
happy to be here.
And guys, don't forget, whenever you're doing a closing, if you're buying a property, get title insurance, because these folks are here to help, and we can help you through that process. So make sure to like and subscribe to our channel here, and hey, keep up with us, because all kinds of information like this is going to be coming out. Look for future episodes, and we really appreciate you guys. Thank you.
The information contained in this video and audio recording is general in nature and should not be relied upon in making legal decisions. Every situation is different, and you should consult with your attorney before making any legal decisions.